Hey guys, Steve here from theturtlefollower.com with the strategy session for Monday, November 10th. So, looks like another day, another higher close. We talked about this over the weekend, how we've just continually made higher highs on the markets, higher lows, and really we're just basically, trending higher with really a lot of strength. I mean, it's very surprising to see how much strength we had off this V-shaped reversal. The fact that we kind of put in a breakdown below this previous low back here from the middle of August, and not even a month later, we're already back at new highs. So we've had from the 16th of October to almost a month, we've gone almost 200 S&P points, which is an exorbitant amount of S&P points. It's I think that's got to be somewhere in the neighborhood of 10%. But again, this is one of the reasons that you got to have a plan going forward. We talked about doing some short trades down here. We said we were just taking quick little trades, nothing major. But we were really looking to continue to buy the strength, and it's rewarded us. Pretty much all of our positions, I think, except one, are positive since we've opened them. And looking at this weekly chart here, this looks like it could be the start of a new trend higher. I mean, in my opinion, we've talked about how we can consolidate and then break out higher, and that's exactly what's happened here on the S&P futures. You could see here, here was the consolidation. Right, it had a little bit of a false breakdown, and look at what we're doing now. We're starting to break out above that level. We are right back at the mean reversion, which is right around 20. Let's see, I think it's 2042, approximately 2047. So we are close to that, and you could see here in the last 2 years, we've pretty much been contained within the first standard deviation moves on the either side. So I'm not looking for us to rip all the way up here, but I would say that 2100 is a reasonable possibility. We've obviously just experienced the downside of that volatility with the move to the second standard deviation move. So if we can get up to 2100, I think that would probably prove to be a successful bounce and off of very oversold levels. So as far as the markets go, I mean, you could look at any of them. The NQs, they're at new highs, 4172.50. You can see consolidating right at those highs. YM, the Dow futures, same thing. Okay, right back at those highs, up 59 points. And the last one, the Russell, is trying to navigate this 1172 area. You can see today it does look like we've broken out from a little bit of a bear flag where we've moved higher, consolidated, and are now pushing new highs. So again, Russell looks like it's trying to play some catch up. Next area of resistance I see on the Russell would be up here at 1200, and you can see that's proved to be some significant resistance over the past year. So if you're still along the Russell, just keep in mind that 1200 level is looming. But for right now, you can see we haven't had a close over 1172 until today, and it looks like now this may be the start of another little move higher. All right, so markets, I mean, can't ask for much more. Definitely doing their job. As far as our positions go, they're doing their job too. Like I said in the beginning, we had about, I think there's only one. I think it's CTAS that is a negative. Let's see if I have it open still. There we go. Let's take a quick look at this. Yeah, so you can see CTAS is the only negative position that we have right now, down 0.49 R, 3.67. But other than that, we're shaping up very nicely here. We have a average R right now of about 0.61 and an open profit and loss of about $4,800. So over the weekend we did pare down this open risk. I have to still adjust that. I think I forgot to do that. But we did pare down some risk in a few positions that we were able to raise stops in. But you could see, I mean, this is just the the whole point of having a system, going about your business. Doesn't matter what the market's doing, as long as your positions are acting accordingly. That's all that matters. So for right now, Apple, 95.06 is still our stop. We could potentially move to this 101.18, this little gap in here. But for right now, like I said, I'm very content just letting these positions run and letting them do their job. If we start to see some little bit of weakness, then we'll quickly move those up. ACE, again, just a simple breakout here. All right, we got in on the breakout here on 1027, and we're up about $4 on that one. So again, stop still down here, 101.19. Next stop level potentially could be this 105.35, but for right now, nothing major in the way of a pullback. You can see where this trend line is. So I'm just kind of letting these work a little bit. The market's been so strong, I don't want to kind of psych ourselves out. This is one that, we got in on this breakout from earnings, and I mean, it's just rewarded us every day. There was 2 days since we've been in that we've not made money on this trade. And so again, 96.39 was our entry price, and we're up at 101. I actually had some call options on this, which worked out great, except I kind of screwed the pooch a little bit and exited on this day here. But nonetheless, a nice 50% return on my call options is more than enough in a few days. Costco, okay, broke out of this secondary consolidation, moved higher, is now consolidating again. It looks like it tried to break down today, couldn't do it. All right, so we're in this small little consolidation, and let's just again be cognizant of where we're at. All right, we'll look at where we're at on the linear regression channel. So 122.07 is a good stop. At some point, we're going to try and move that up, and we may even move all the way up to this 128.50. But for right now, again, I would assume that this second standard deviation move, as it has in the past, will contain price. But that does not mean that it's necessarily going to pull back. It may very well mean that it goes sideways and works off those overbought conditions. CTAS up 0.15. You can see this is our only loser right now. So 67 is a good stop level for that. If it doesn't work out, hey, it doesn't work out. Home Depot up 0.52. Again, starting to break out of this secondary consolidation that it put in. Let's just be careful here. Again, earnings coming up on the 18th. So that would be, is that this week? That's not this week. That's next Tuesday. All right, so you got about a week till earnings, so maybe it's starting a little pre-earnings run right now. But again, if you're in for a nice little trade, you can definitely use this consolidation as a good setup. Kroger up 1.31. Again, this was when we moved our stop higher in. Okay, moved our stop from 50 to 51.50. Had another secondary consolidation, broke out of that. And you can see here another consolidation. You can see these 3 bars, all right, with the tops, the high and the low of each bar inside the one previously. So that's another form of consolidation, and then a breakout. So again, nice little short-term setup there, but we are getting into that overbought area. Limited brands, okay, up again. Nice trade, but look at where we're pushing. We're pushing right into that overbought area. So let's see how well these are contained at these levels. I mean, for as strong as the stocks have been, that they're right up there, it's very possible that, this maybe has a little bit of a push through, similar to the S&P that had a push downward. All right, volatility works in both directions. But for right now, 65.30, good stop level. Next stop level potentially could be either these highs here at 68 or even 69.30. Lockheed Martin up 0.45. This one's been pulling back recently. So this is what I was talking about. This is more of the type of pattern I like to see to move a stop. So if we can come down, bounce, move higher, then we have a good stop. When we get those little consolidations, it's very difficult to determine if that's actually a low or not. But for right now, 170 is a good stop in Lockheed Martin. Nike, All right, Nike's just continue to work. Again, I own call options on these, so that's one thing I want to try and get into maybe towards the beginning of the new year. We're going to start talking about how I add to positions with call options instead of buying more stock. So I have a core position in stock, same way as we enter now, 0.5% risk, and I just let them work. But then I also do add to my positions using call options for some more short-term gains and cash flow type of trades. So I'll use a different set of moving averages, but very similar type of setup that we use to enter the long trades, just on a little bit of a shorter term time horizon. But again, we'll get into that maybe towards the new year. All right, what do we got here? Pepsi. So Pepsi, you can see here, bounced off of that $90 level, moved higher, broke out, consolidated a little bit, and is now continuing to move higher. So again, $90 is a good stop in Pepsi. Next stop level potentially would be $93.80. Ross Stores, another one's breaking out from another secondary consolidation right before earnings. All right, so this one has earnings coming up on the 20th. And again, if you want to take that short-term trade, you put your stop right here at $79.47. For us, we're going to use 74, and then potentially would trail to the 79.40 as the 50-day moving average exceeds that level. Simon Property Group, 3-day pullback, and today nice bounce higher. So this looks like maybe it's starting to put in a bit of a consolidation. All right, top and bottom are defined, so let's see what happens now if it moves sideways. But again, look at where we are. All right, so it would not be surprising to see this move sideways, let that 50-day moving average catch up, establish some sort of trend line, because you can see here we don't have one. For right now, the best that I can do for you is possibly something along those lines. So let's see how that plays out in the next week or so. And the last position that we're in, Travelers, again, nice move here in Travelers, just continued move higher. Out of these breakouts, you can see how strong these weekly consolidations are, how strong these breakouts can lead to nice rallies. And again, right at that second standard deviation move. So as far as positions go, everything looks great. I mean, not much to ask for, or not much more to ask for. Just let the stocks work and let them do their thing. All right, so as far as new positions go, let's take a look at our watch list, and you can see here I've highlighted 3 positions or 3 potential trades that have triggered. First one is NSC, Norfolk Southern. You can see that breakout that we got over 114.40. So I think if we're going to enter this one, which we will, because looking at our portfolio here, you could see industrials were only 12.45%. So we have the option or the opportunity to add another industrial to the portfolio. So again, we will go ahead and instead we're going to go ahead and still use 0.50% risk. We'll enter at tomorrow's open, and our stop level is actually going to be here at 108. All right, so we'll call it 108. Let's change that for our stop. All right, so there's your stop right there. You can see this smaller consolidation. We couldn't go all the way down. Preferably, I would have rather gone all the way down to 102, but you could see here that trend line, the 50-day moving average, everything would be broken if we broke down below 108. And that puts us within, what is that? $8 risk there for that trade. So good, about 7% risk on that one. Next one that we're going to enter is Lilly, LLY. All right. And again, enter at tomorrow's open. We're going to use 63.75 as our stop. So that's just about $5 on the trade. And again, that's just about 8% risk. You know, mental math there, not exact, but somewhere around a little less than 10%. And the last one that we are going to enter is going to be ABT, another healthcare company. All right, up 1.66%. You can see it's breaking out of the secondary consolidation. And with this one, stop's going to go a little bit wider, and we're going to go down here right to 41. So it'll be a $3 stop on a $44 stock. So I think that's a good risk reward. And again, that will set us up for about a 8% risk on that trade. All right. So again, entering NSC, Lilly, and ABT tomorrow. That'll give us a total of 17 positions, and just about, I would say, somewhere in the neighborhood of 140% or 40% margin used, which is really the max I want to go. I mean, it's very difficult here. You try and organize the portfolio in such a way that you're diversified, and you keep getting these positions and keep getting these trades that look great, and you want to take them, but at some point you have to say enough is enough and leave it at that. So maybe one more position just to make it a nice round number in 18 versus 17. I don't know, maybe I have something with even numbers or what, but so maybe we'll add one more, but I think at this point we're probably pretty close to maxing out that portfolio. So let's just run through the other couple that we have in BLL. You can see that's still making its way back up to that 67.84. Kansas City Southern, all right, that one broke out, but I like NSC much better as far as the strength of the breakout. Okay, you could see nice strong breakout. I mean, nice big open bar, 3.3%. As opposed to Kansas City, where you are still up 1.16, but it kind of trickled higher, and it's definitely not as much in an uptrend. You can see here we're hitting previous resistance here around 126, whereas NSC is at all-time highs. All right, so that's the difference. That's why I want to own NSC versus Kansas City. CenturyLink still bouncing off the bottom of that box. RSG is coming close to a new re-entry. Again, over $40 would be that. But, we're pretty much, that may be the last position. One more industrial, probably not though. Discover Financial, again, financial, nice open green candle here. But just looking at it, I think the stop would have to be right here around 61. For me, little far, plus financials, we're pretty much maxing out at 30%, which is really where we try and cut it off. Weyerhaeuser, however you say it, sitting right below resistance. PetSmart, again, right at resistance. And Rubbermaid, just chilling out in the middle of the box. So, out of what we have, NSC, LLY, and ABT are the best case scenarios or best looking trades that we have that are setting up for us. So we will take those, gladly take those, and put those on tomorrow at the open. I'll update the portfolio tonight, and definitely make sure you follow along tomorrow. We'll see you tomorrow for another strategy session. I know I haven't been doing the educational videos lately. It's just I got a lot going on right now. So trying to just do what's really more important. Just I'm hoping this is giving everyone a good idea of how I trade, how I go about my business. The educational videos are good. You can learn most of them from watching these videos. So that's kind of why I haven't been doing the stock market outlook. You could find that in the weekend updates, and everything else we kind of go through. One thing I did want to point out to you guys was, I know for those of you that have been following me, LUV has been a thorn in my side. It was great, it was bad, and now look at this. So I mean, sometimes you look back at these and it's very tough to look at, but sometimes you gotta just kind of give yourself a little shot every once in a while. But you can see here we entered on 814 on that breakout. We came all the way up. We made almost $5, gave back about $5, and now it's all the way up here to almost $40. So an entry from let's see, what was it, $29.78, and we're sitting at $39. So $10 on a $29 stock, about 30% move. But look at how it's moving. I mean, very volatile. Looking back, I really don't think we could have done anything different. But needless to say, our system works because it would have identified that trade. Now it's just a matter of us firming up our management of those trades. All right. So you could look at it two different ways. I look at it as my system works. It got me in a trade that made 30% or would have made 30%, or you could look at it as my system doesn't work because it didn't get me out at the top. Yeah, too bad, so sad. Move on. Don't worry about it too much. But good looking trade. If we would have managed it, maybe a little bit better. But it was a tough scenario. So anyway, enough for tonight. Again, I'll see you tomorrow night for another strategy session. Take care, guys.